All right, let's talk about Palantir. After a massive run-up of over 140% this year, the stock has hit a rough patch, and investors are getting spooked. In November of 2025, the stock faced heavy selling pressure, and the slide continued into December. After reaching an all-time high in early November, the stock has pulled back significantly. The big question everyone's asking is, has the music finally stopped? Is the AI bubble that has minted fortunes over the last couple of years finally popping? Is this just a healthy and frankly overdue pullback for a revolutionary company that is fundamentally changing how governments and corporations operate? Or are we staring into the abyss of another dot-com style crash where world-changing companies see their stock prices evaporate because they were priced for a perfection that was simply impossible to achieve? Today, we're going to cut through the noise. We'll break down Palantir's eye-watering valuation, dig into the powerful bull case that has so many people excited, and then confront the bear case that has insiders and famous investors heading for the exits. Let's figure out if this brutal sell-off is a golden buying opportunity or a massive value trap. Before we get to the terrifying valuation, we have to be honest about why Palantir's stock took off in the first place. This isn't just hype. The business is performing at an elite level, and its technology is undeniably impressive. Bulls will tell you Palantir is building the digital operating system for the modern world. Its platforms, Gotham for government and Foundry for commercial businesses, allow huge, complex organizations to weave all their messy data into a single, coherent picture. This isn't just for making pretty charts, it's for real-time, critical decision-making. We're talking about everything from counterterrorism for clients like the CIA to optimizing supply chains for commercial giants. The launch of its artificial intelligence platform, or AIP, has been an absolute game changer. AIP lets companies use the power of large language models, the tech behind things like ChatGPT, safely on their own private data. For a corporation, this is the holy grail. It connects the magic of generative AI directly to their operations without sending sensitive information into the public cloud. And the results speak for themselves. The company's most recent earnings report from early November was a blowout. Revenue for the third quarter surged an incredible 63% year over year to $1.18 billion, crushing analyst estimates. Adjusted earnings per share also came in well ahead of expectations. This wasn't a fluke. Palantir has been consistently raising its guidance. In its Q3 report, the company told investors it expects full year 2025 revenue to grow by a staggering 53%. The commercial side of the business, once a concern for investors, is now on fire. U.S. commercial revenue skyrocketed 121% year over year in the most recent quarter. Palantir is landing major new clients and expanding deals, creating a powerful flywheel effect. Once a company builds its operations on Foundry or Gotham, the switching costs become astronomically high. You don't just unplug Palantir. You'd have to fundamentally re-architect your entire organization. This creates a deep, durable moat. It's why bulls believe Palantir isn't just another software company, but a foundational pillar of the AI revolution. They see the explosive growth and mission-critical technology and believe any price paid today will look cheap in a decade. They see the stock's pullback not as a warning sign, but as a gift, a chance to buy into a world-class leader at a discount. But for all its business success, Palantir might be a terrifyingly dangerous stock right now. The entire bear case can be summed up in one word: valuation. The numbers here are simply disconnected from reality. Even after the recent drop, Palantir trades at valuations that are hard to comprehend. As of mid-December 2025, the stock is trading at a price-to-earnings ratio of over 400 and a price-to-sales ratio that has been hovering at over 115. To put that into perspective, for comparison, AI chip leader NVIDIA, which is also growing at an incredible pace, trades at a forward PE ratio of around 28 to 30. These are not normal multiples. They're the kind of numbers that make seasoned investors break out in a cold sweat because they've seen this movie before. This is exactly what we saw in the late 1990s during the dot-com bubble. Back then, you had fantastic, world-changing companies like Cisco at the forefront of the internet revolution. They were growing revenues at an incredible clip, their tech was everywhere, and investors believed no price was too high. They were priced for perfection. When the market finally turned, it didn't matter that they were great companies. Their stock prices collapsed by 80 to 90% because the valuations were built on pure euphoria, not financial fundamentals. Palantir is now being held up as the poster child for this new AI bubble. And it's not just anonymous critics saying this. Renowned short seller Andrew Left of Citron Research has been incredibly bearish, and other analysts have suggested that Palantir's valuation is stretched thin. By the way, if you're finding this analysis valuable, do me a favor and hit that subscribe button. The AI revolution is going to create massive winners and losers, and my job is to give you the data-driven analysis you need to navigate it. Don't miss the next deep dive. Perhaps the most deafening warning sign isn't coming from short sellers, but from the people who know the company best, its own executives. Insider selling at Palantir has been relentless. On November 20th, 2025, CEO Alex Karp filed to sell a massive block of stock. He wasn't alone. On the same day, 4 other senior executives also filed to sell huge amounts of stock. In total, the group signaled their intent to unload over 1.2 million shares worth more than $205 million. Over the last 3 months of 2025, insiders have sold shares worth approximately $164 million. Now, bulls will correctly argue that insiders sell for many reasons: tax planning, diversification, buying a new house, and that's true. Famed investor Peter Lynch famously said that insiders sell for many reasons, but they only buy for one. They think the price is going up. Some have pointed out that Karp's sales are part of a pre-scheduled plan to avoid accusations of insider trading. However, the sheer scale and timing of these sales are impossible to ignore. When the people with the most intimate knowledge of the business are consistently and aggressively cashing out after a massive run-up, it sends a powerful message. It suggests they believe the stock is, at a minimum, fully valued. It's not just the insiders. Big money managers are also trimming their positions. Cathie Wood's ARK Invest, once one of Palantir's most vocal champions, has been a consistent seller throughout 2025, trimming its position on numerous occasions. While Palantir remains a significant holding for ARK, the consistent profit-taking from a fund focused on disruptive growth is a notable yellow flag. This selling pressure is happening as other AI darlings have also faced volatility. Investors appear to be growing nervous about the sky-high valuations across the entire AI sector. When the tide goes out, even the prettiest ships can get stuck on the sand. So what's the verdict? Is Palantir a buy after this painful crash, or is there more pain ahead? Here is my take. Palantir is an incredible, world-class company with a powerful competitive moat in the government sector and explosive potential in the commercial space. Its technology is legitimate, its growth is undeniable, and it is poised to be a dominant force in the AI era. However, the current valuation remains dangerously high. The market has priced in not just years of perfect execution, but a level of growth that is almost unprecedented and leaves zero room for error. A price-to-sales ratio over 100 is not a sign of a healthy investment. It's a sign of speculative fever. The relentless insider selling and profit-taking from major growth funds only add to the risk. Buying Palantir at today's price is not an investment. It is a bet. It's a bet that the company can continue to grow at a blistering pace without a single misstep. It's a bet that the broader market will continue to assign a massive AI premium to its stock. It is a bet that this time it's different. And history teaches us that this time it's different can be 4 of the most expensive words in investing. For me, the risk-reward equation is simply not favorable at these levels. While the company is phenomenal, the stock is a different story. I believe Palantir is a fantastic company, but a questionable stock at its current price. The valuation needs to come down much further to provide a margin of safety for new investors. The AI revolution is real, and it will create generational wealth. But that doesn't mean you have to buy every AI stock at any price. The dot-com bubble taught us that you can be right about the future and still lose a fortune by overpaying. The key is to separate the truly transformative companies from their often inflated stock prices. If you want to keep learning how to do that, make sure you're subscribed to the channel. We'll be covering the biggest players and the hidden gems in the AI space to help you find the real opportunities. Thanks for watching, and I'll see you in the next video.